Hey everyone, welcome back to my channel. So in today's video, I'm going to be talking about how I would invest 100k into property, how I'm actually going to invest 100k into property. And it's very different to what you would normally see on most YouTube videos out there, where they tell you to spread 100k down to 25k across 4 properties. I don't believe in that. I am going to explain why. So stick around to the end, because I think it might open your eyes to actually the possibility of just going and buying that one property, maximum value of the 100k that you can achieve. So stick around to the end, because this is going to be really interesting. So we have 100k to invest into property, but how are we going to do it? Are we going to buy one property or are we going to buy 4? Well, what I do want to say is, firstly, if you've got 100k to invest in property, massive well done. And secondly, getting into property, however you do it, is such a strong asset class. So, you know, these are just opinions, but if you can get into property, well done. But this episode is to talk about, do you buy one property or do you spread it across 4? Well, personally, I believe you go and buy the one property, and I'm going to explain exactly why I believe that. So stick around to the end, because shortly I'm going to show you a breakdown that I've put together on Excel, which hopefully will open up your eyes, bit of reality kick back in actually to show you what the two look like, what the risk elements are, and what you can achieve if you buy one or you go on to buy 4. Now, there are pros and cons to both. I am biased on buying one because that's what I'm going to be doing, further to adding to the portfolio, and I prefer to do it that way. Slow and steady wins the race in my eyes, and that's the way that I like to do it. So there is no right or wrong way. This is just the way that I like to do it. But hopefully you get some value, and maybe it opens up your eyes, because I know a lot of the videos that are on YouTube and a lot of the trainers and mentors, and certainly education companies, will always push you to go and buy 4 properties and spread that 100k. And I believe really it's to keep you engaged in their training, because not everyone knows how to do that. There's a lot of risk involved, and sometimes you need someone to hold your hand to do that. And that's when the training companies and the mentors come in, because they charge you for holding their hand while doing that. Whereas the way that I'm going to explain, anyone can do it. If you have the cash to go and buy, this is very simple. And as you know, if you follow me and you've watched some of my previous videos, you might already realize by now, I like to keep things simple. I don't overcomplicate things. I try not to get too emotionally attached to investments. I do it if it makes sense, figure-wise, and if it works within my financial plan and my family's plan. So that's the most important thing. It has to work for you. So without further ado, let me show you my breakdown. I'm going to pop it up on the screen shortly. I'm going to talk through it. And it's interesting because most recently I put out a poll on my Instagram about what would you do with 100k into property? Do you go buy one house, or do you buy 2, or do you go and buy 4? And I think I had something like 18 plus people choose you're buying 4 properties. So it's really interesting. Now, is that because you genuinely believe that 4 is the best option? Or is that a case of, again, so many videos on YouTube are telling you to buy 4 properties? It's the norm across YouTube. It's what they're telling you to do. So let's go against the grain. I'm all about going against the grain. What I'm going to do now is I'm going to pop up on the screen my breakdown, and I'll talk through it. So let's get into it. Okay, so let's take a look at my breakdown here. Now, what I will say is, please leave me a comment below, because if you disagree or you have a different take on something that I've got in here, I'm all up for having a discussion on it, and I'd love to hear your opinion if you think something's different, or you don't agree with it, or you do something in a different way. So do let me know in the comments below. Right, let's jump into it. So here we've got 100k. Do we go for one property, or do we go and get the 4 properties on a 25k deposit? Well, let me address something. This is a bit of reality, a bit of a kickback. Sorry if you don't like to hear it, but it's the truth. It's very unlikely you're going to be able to break 100k down into 4 25ks exactly and get a clean 75% mortgage. Realistically, you're probably going to end up putting down at least about 21, 22k per property. You're going to need to keep 3 or 4k by for fees, any works that need to be done, getting the tenants in, paying the estate agent to do the inventory check, everything like that. So everything to set up those properties, any works that need doing, surveyors, stuff like that, you're going to need to keep money back. So actually, when we look at it, it's about 21k, 22k per property. So you're going to have a slightly bigger mortgage than a 75% mortgage. So again, that's the reality. Unfortunately, a lot of the educational courses, training companies, mentors, they do everything on gross, clean numbers. That's not the reality. So when you hear people talking about profits that they've made by training courses and stuff like that, you always hear the gross. We never actually get down to the nitty-gritty net. So I just want to say that. Same going for buying one property at 100k. You know, you're going to need to keep at least 5k by as a contingency for any works, fees, surveyors, stuff like that. So really you're buying a property for around about 94, 95k. You want to keep some by. So let's have a look and let's start by risk. So what do I mean by risk? Well, what is the risk of buying one property against 4? I've put buying one property down as low. Reason being is because obviously if you're buying one property, it's only one property to manage, keep control of, and make sure it all goes right. You know, having 1 against 4, there is an obvious risk difference there. You've got low for one property, medium to high. And I say medium to high, I'd actually put it on slightly more the higher side, is because you've got 4 mortgages to manage, you've got 4 properties to potentially renovate, refurb, 4 purchases to make, and really you want to do it at the same time so you're not dragging this process out. I would want to buy 4 properties roughly at the same time so everything aligns. So when the tenant agreement starts, you can do everything in one and potentially go with the same agent. So it's a higher risk. You've got so much more to manage. That is just the fact of it, okay? The next step is looking at the income. Okay, so this is one that gets me all the time. And again, you've got to take time to actually look at it and go through it. People will say buying 4 property, you can benefit from 4 incomes, being generated from each and individual property. Yes, that's correct, but let's really look at the facts of it, okay? If you've got one property and you buy it for 95k, but let's say you bought cash, so you've got negotiation power and you've bought a property, let's say that actually was worth 100k, but you bought it around about the 94, 95k. So you've saved a bit of money, you've got a bit of below market value give there. You know, you're looking really in the Midlands or slightly up north, northeast, even the northwest, you're looking at probably generating between 6 to 650 per calendar month, okay, gross. Now, if we go and buy 4 properties, we've got heavy mortgages on those, okay? We're only realistically, after you've taken off estate agency fees, a little bit for maintenance, perhaps you keep by for insurances, you know, per annum, you put a buffer by, you're only really going to be taking 150 to 200 pound per month. So really, by having the one property owned outright, you're going to be taking more per month, and it's more. There's more stability there, you know. Because again, we're going to get onto voids shortly, but taking a gross amount of, say, something like 650, really you're achieving what you would achieve by 4 properties anyway. But then obviously we're going to get onto capital growth, because I know that people will kick back at this and say, well, your net worth and your capital growth will grow so much quicker. You can develop at a faster rate, you can scale things. Yes, that is true to a certain degree, but we're going to get to that. So, capital growth. I have put buying one property is going to be a slower rate because yes, you're only benefiting from one property growing. Whereas with the 4, yes, you get the overall gross capital growth growing higher. However, let's keep it factual and realistic. And what they don't explain in these training courses and other videos on YouTube is that you've got heavy mortgages that you're still going to need to pay, right? So yes, you get a gross higher net worth and capital growth effect, compound effect, because you've got the growth of 4 properties. But the majority is still owned by the bank. So you're only getting small amounts of growth in the equity there because you're still chipping away at these mortgages. So you don't really own the property. Whereas let's say over a year and a half, 2 years on the one property, you know, you'd have had that increase by, 2, 3, 4% over the property. That's all of yours. That is yours. That is your net. That is what you own for one property. So everything in the capital growth is yours. Whereas on the 4 properties, you're still owing it to the bank. Okay. So that's just my take on that. I still believe that having that one property growing slowly, slow and steady wins the race. Now with voids, this is something else that is not really spoken about much. With one property, if I own it outright and I don't have a tenant and a tenant leaves, And let's say you're working full time, okay, and you're growing a property portfolio on the side, which is a great idea. Start that side hustle of growing a portfolio. Now, what you don't want to do, I think a worst nightmare is that if you were to buy 4 properties, you've got 4 mortgages, and let's just say it can happen. Let's play worst case scenario, because not a lot of people do, is that you have 4 voids, you have no tenants. Well, you're going to have to use your income, which should be going to you and your family, to make sure you've got a roof over your head and food on the table. Now you're having to pay 4 mortgages. Unless you've got rich parents, if you have, well done to you, congratulations. I certainly don't, and many of the people that I know aren't in that privileged position. You're going to have to pay those mortgage payments. Well, how are you doing that? Okay, well, let's say you've got 2 properties that are vacant. Yeah, you can use the other 2 to pay those off. So what are you benefiting from? You're not benefiting from an income there. You're just then covering mortgage payments. You're constantly tightrope, walking the tightrope. You're balancing all the time. Your risk is still high. I don't want that. If I've got no one in, I've got no outgoings. I don't have to chip into my incomes. What we've got coming in won't be going out towards that property, covering mortgage payments. That's what I prefer. It's cleaner, it's less risky, and there we go. So the buy, refurbish, refinance, rent strategy, okay? What can you do quicker? Well, yes, with 4, I do believe that you could have faster growth, okay? Because you've got 4 properties to play with. You've got 4 properties that you could refinance, refurb, draw money out of, okay? Yes, you could do that slightly quicker, but still it brings you back to the fact, how many of these properties earning 150 to 200 gross, by the way, this isn't even net, after tax and insurance. How many properties do you need to replace your income? Because for me, I'd need about 22 properties. So I don't know how much you live off a month, but if, who wants 15, 20 properties that are generating that amount of income? I would rather have 3 properties in the south that generate £1,200 gross. A month you walk away with 900, 800 net. And you have 2 or 3 and that's it. And that covers your income. And then you still benefit from the capital growth. I like to keep things simple, people. So that's the way that I like it. So that's in regards to the buy, refurb, refinance, rent strategy. Yes, you can do it quicker, but you can still achieve it buying that single property, because what you could do essentially with one property is the way that I would run it, is you buy the property outright, a year and a half passes, 2 years, and what you could do is you then have the opportunity, is what I'm going to talk about shortly coming up, is you could release equity, you could refinance it, you could take out a small portion of the capital growth that you've got there, the equity in the property, and you could put that down as a deposit on another property. So you can still do it. Yes, it's slower, but you can do it in a more manageable and controlled and less risky way. Okay, I'm going to get onto that shortly. Investment leverage. Now, this is something that's not talked about a lot, and this is something that I really want you to note down and listen to here, because this is really important and not many people think about this. You have such a higher investment leverage opportunity by owning a property outright than you do on a low leverage property across 4 that have big mortgages on it. So let me paint this picture for you. So you buy a property outright, but you want to grow your portfolio quicker. So let's just say buy that first property, okay? You own it outright. What it now enables you to do is go to an investor and say, and by the way, all of this starts at money management. You need to be saving hard, cash flowing hard, and really controlling your funds in order to save up for your next property. This is the realistic way I'm talking about here. This isn't some made up stuff that you hear in training courses and educational seminars and stuff like this. This is reality, people. You're not going to get this overnight, okay? You've got to work hard, cash flow hard, and save hard, okay? That's the reality. Unless you have the next new Apple or Amazon idea that can blow up, we're going to have to do it the right way. No one's winning the lottery here. So, higher leverage for investment. So you own a property outright. What you can now say is, okay, for the next year, I've got bought my first property, or whatever it is, however many properties you've got, but you bought your next one outright. Work hard, cash flow hard, save up. You've got next 5, 10K deposit for your next property. What you can do is you can now go to an investor and say, right, I have 5, 10K that I'd like to put into my next property portfolio, my next property. I would like to borrow 50, 60, 70 grand. And what you can do is you can now offer a full charge security, first charge security on your property owned outright. That means you can leverage the more that you borrow. So I could say to an investor, look, I want to borrow 100K. I've got 10K, but I want to buy my next property, which is a little bit more expensive. It's above 100K. I want to borrow 80, 90K, and I'm going to put that with my 510K, which will go towards my refurb. You're buying my actual next property. What you can do is you can take their money, put the security on the property you own outright, leverage against that, go and buy your next property. So you have such a strong leverage and you don't have to put that on the home that you're living in. Whereas, let's play this on the flip side of owning 4 properties that have all got 75, 80% mortgages on it. You have no leverage. And I would rather work with a private investor than a bank because I can get better rates and I can have a continued, easy, simple, man-managed, tailored contract with an investor, how it works. So it's a win-win situation rather than working with a bank. And I can borrow continuously, time and time again. I could work with the same investor because I have the leverage to say every time I borrow money from you, you can have a first charge security on my owned outright buy-to-let property. You can't do that with 4 properties that have heavy mortgages on it. Where are they taking their security? Unless you have other properties to offer them. If you do, great, you can still do that. But I don't want to be putting it on the home that I live in, so I'd rather put it on a property that I own outright. So your leverage is higher. And what you can do with that, just painting another picture, borrow the money, save up your own deposit, put down another deposit, borrow the money to buy it, refurb it. Then you can start the BRR strategy. Okay, and then you can scale it from there. But you can only do that by getting that high leverage by owning that property outright. So the next thing is equity release, releasing or refinancing that property. So if you own one property outright, at any point you could go and refinance against it, or you can release the equity from it that you have in it. If you had that property and you never refinanced or got the equity from it, 2 years later, the property's gone up in value. You already bought cheaper anyway because you had the cash, you had that negotiation power. So at any point you decide to scale quicker or your strategy changes, you have the option to do that because you can then release it and have a small mortgage on it. Instead of having a 75, 80% mortgage, you can now have just a small 25, 30% mortgage because you've decided, right, I've saved up some more money. I've got some money to go into my next property. I just need a top up. I don't even need an investor. And what I can do now is you can become your own investor because you can just refinance and release some of that cash out of that property. Yes, it's slower, but it's less risky. It's more manageable. And it's just controlled. And that's the way that I like it. Keeping things simple. Whereas equity and refinancing against 4 properties that have mortgages on them, you can't do that. Okay, yes, you could do it to a certain extent when over capital growth and time goes on, then you could do it. Yes, you could do that. Or if you're able to perhaps wait for capital growth to kick in on one property, you sell that property off and then you chip away and sell, and then you top up on the mortgages so you pay some of those off. Yes, you could do it like that. But the whole point, if you're going to buy 4 properties, the whole point, I assume, that you've bought it is to build on your net worth and your portfolio. So gross net worth. Okay, so many people will turn around and say, scalability here. You can grow your portfolio so much quicker if you spread it across properties. Yeah, that's true. And that's why I've put that there. It's a higher rate to grow your gross net worth. And I emphasize that gross, by the way, because that's not your net. The bank still own those properties. Whereas if you own properties outright and you're buying at a slower rate, then your net worth will be slower, but it will be yours. I would rather say that it's mine than saying it's not yours, and that actually you could lose it. And if a pandemic kicks in and you have no income and then you have voids and you can't pay, look at all the situations of troubled landlords where they're having to sell. Do you want to become a troubled landlord? Are you getting into property for the short term that you might come across issues? I'm certainly not. Escaping the rat race. What is quicker? So for me, it's buying single properties outright. Why? Because what would you rather do? Take a gross income of 650, net you walk away with, let's say 400, being conservative, or would you rather have 5, 6, 10 properties earning you 150 to 200 pound gross, by the way, net you walk away with 100, 150 pound, 175 pound tops, right, depending on where you've bought. How many properties do you need to replace your income at the moment? Because believe me, I knew one guy who had around about 30, 40 properties and they're all cash flowing about 150 pound a month. He sold a big portion of them because it was nothing but a nightmare, because He couldn't get out the rat race, and he was working full time, and the more properties he was buying, yes, his gross net worth was so great, but he was still not replacing his income. So that's the whole thing, right? Is trying to replace your income. So you're going to do it a lot faster by buying properties outright and taking the full whack of the income. Buying power. So in the beginning, you've got 100K, well done. You have so much more buying power to negotiate. Say if you've got 100K clean and you're going to spend 90 and you keep 10% buy and you keep 10 grand for contingency work, stuff like that, fees, everything that we said before. You have a huge buying power with 90K to perhaps buy a property that's even worth 105K than you do by going 25K across all. And like I said, it's not really 25K, you'd end up with about 21K per property. You don't have huge buying power. Estate agents are going to know that you need a mortgage. 21K down as a deposit, they're not going to bend over backwards because they know that you're going to be in the process. Mortgages can fall through. They're going to be aware that you are not in the strongest position to buy. Unless they know you and you've worked with them multiple times, well done, happy days. But let's play on a reality scenario here, and that's what I'm all about, is keeping things realistic. You won't have the same buying power, so you could not pick up the same deal. Whereas 100K on one property, instantly you can gain equity in that property, value, because you can buy lower than what it's worth. And an estate agent, when he sees 100K on a bank statement, will bend over backwards for you more than saying, I'm going to buy 4 off of you, but I've got to wait for mortgages and I'm just waiting on confirmation. Oh, apologies, one mortgage has just fallen through. Finally, complications. Buying one property, you're going to have less complications. There is less to deal with. 4 properties, there are high complications. Mortgage fall through, voids, boiler breakdowns. Imagine this, you had 4 voids and 4 boiler issues. Believe me, that is not an issue that I want, and that is not an issue that I will get myself into. So this is just the reality. It's not all doom and gloom. There are pros and cons to both. I have been more biased because I do go down the route, and I'm in the process of continuing that portfolio with another lump sum into one property. I won't spread it across properties. I'm going to go and buy another property outright. So that's the way that I prefer it. Like I said, leave me a comment below. Do share your thoughts and opinions on this. Like I said, that they are my thoughts and opinions, but I believe they are based on facts, reality, and just a bit of kickback to what you would normally hear on YouTube. Okay, so obviously my opinions are very strong in the fact that I really do believe that buying one property is less risky, safer, more manageable, and you can scale in a more realistic way than, like I said, you might see on other videos on YouTube. I am all about going against the grain and kicking back against what is portrayed that is so easy to do, when actually it can get people into risky financial positions. And being an investor and being smart with your money really does start by thinking logically, not making decisions on emotions, and being controlled in what you do, and doing it for the right reasons, doing it for the long term, because there is so much out there saying that you can do this now and you can do this quick and with no money, quite frankly, is ridiculous, because you need money for everything. You can't go and scale with no money. Yes, you can use investors' money, and there are real good ways on that breakdown for one property and for 4 properties that you can use investors' money, use mortgages to scale, but you need to do it in the right way. And sometimes we need to sit back, work out what it is we want, short, medium and long term, and then we need to plan for that and then go ahead and do what's right for you and your family. And for me, as I just shared there, for me, it's safer, and there's so many more pros to buying one because I can leverage against that. And I can use investors' money in order to scale that at a reasonable rate. Most millionaires and billionaires did not do it overnight. They took decades, 10, 20, 30, 40 years. And unfortunately, with property, it's said that you can do it overnight with no money, and that taking these big risks, really what you're doing is they confuse the naive, the uneducated, and there's so many questions and so many strategies that are put to people, like buying 4 properties, lease options, buy, rent, refurbish, refinance and rent. All of this takes knowledge and education and time to learn and then execute. And by putting all these strategies out there, it makes you question what's right for you. So therefore you continue paying for the knowledge when really we should have kept it simple. buy a property, look at the options that it gives you, leverage of investment, releasing the equity, refinancing against the property you own outright, managing it, learn how to manage a property, understanding what tenants want, voids, insurances. Slow and steady wins the race. So I really do hope that this video offered some insight and perhaps it opened your eyes to the fact that actually there are so many more options and safer options that are less risky by buying one property while still being able to scale at a reasonable rate, and your net worth and your net income is that much greater than essentially what you would get gross from 4 properties. And you've got to work out how many properties do you need to replace your income. No one leaves the rat race overnight. That's just my opinion. I'm all about reality and doing it the right way and starting by money management. Work hard, cash flow hard, save hard, self-educate, and look, by all means, reach out to me. If you think I can help in any way, reach out to me. I'd love to hear from you. Do leave a comment below. And if this video did help, I would appreciate if you hit the like button, do subscribe to my channel. I have some amazing content coming up. And until the next video, I will see all of you very soon. Jump onto my Instagram profile, Aaron Knightley Official, and come and connect with me there. Drop me a DM and let's have a chat. And I'll speak to all of you very soon.